What's up, guys? I hope you're doing well. So basically, not really even just confirmation of the stuff that I've been posting on my website and stuff, but I found the transcript for a speech given by Patrick T. Harker, who's the president and CEO of the Philadelphia Fed, I believe. Um, anyway, just going into like the structure and some of the history of the Federal Reserve, because a lot of the people don't actually look into that. But I do have a few posts and other videos and stuff going over those posts, specifically on the structure of the Federal Reserve, not so much the history per se, at least not like the very basic stuff, like the Federal Reserve Act in 1913 and so on. Um, but yeah, we'll go straight into the screen share and look at the speech. Let's see, because this is a long one. But basically, in a lot of this history part, I'm just going to kind of read it out and it's just to highlight a bit because that's pretty much all there is. But the first Bank of the United States was the brainchild of the man who, in recent years, has become everyone's favorite founding father, Alexander Hamilton, which I don't really know where that comes from. Like, I don't know, maybe it's his favorite, or I'm just out of touch with. I don't know, do they even do surveys and stuff on like what's your favorite president? I feel like that's probably something that's been done, or I mean, I guess founding father technically. Um, anyways, so the bank was located in Philadelphia when it was still the capital of the country. It was established in 1791. Um, and that was basically just to deal with the debt of the Revolutionary War, right? And so it's a big reason for central banks is war. But as Broadway has reminded us, Thomas Jefferson was among those who worried about power and was too strong and too centralized. Sorry, he worried about power that was too strong and too centralized. He even once famously said he found banks to be more dangerous than standing armies. When the bank's charter was up for renewal after its initial 20 years, the Jeffersonian argument won out and the measure failed by a vote each in the House and Senate, and the bank was dissolved. 5 years later, they got the second one, the second Bank of the United States. And then 20 years after that, again, the charter was not renewed. Um, again, owing to a strain of popular sentiment that didn't trust powerful centralized institutions. And so the period leading up to the third iteration of American central banking, the Federal Reserve, was marked with currency instability, bank runs, and cycles of booms and busts. At one point, JP Morgan actually had to step in personally and bail out the country. It's part of the reason why that's the thing. There's a lot of like conspiracy theories, I think, about like JP Morgan and all that other stuff, which to be completely honest, I'm not well versed in. I was never really one to go down those conspiracy theory paths. Um, not saying there's no merit to it, but it's pretty much just not making a comment on it. It's not something I've looked much into. Um, but yeah, um, was there anything else I wanted to talk about? Because I feel like there was. But anyways, yeah, a lot of people don't know that the Fed is the third central bank of the United States. Um, yeah, we've had two tries at this before, um, and between the second and the third one, we had a period called wildcat banking, or at least that's what I've heard it called. Where basically, like some states had their own banks, or it was mostly like private institutions where they even had like their own personal currencies. Um, and there was a lot of other stuff going in there. And there's a lot of what they call financial instability. Um, basically, with each bank having like its different currency, or like there are multiple different banks' currencies, and it was on like a very case by case basis. It's definitely an interesting period in banking history. Definitely recommend going over it. Um, but this is kind of where the whole centralized opinion, I guess, or the centralized nature of a central bank um, was the problem, and why the first two were not renewed. And so the Fed was supposed to be different, right? So it's supposed to be more decentralized, right? And so he says we're making national policy, but we're doing it for an enormous country, and the averages of economic data can obscure realities on the ground. And so this is where he goes into the need for this decentralized nature, because that was one of the biggest problems, or I guess the biggest problems, and probably why the Soviet Union collapsed, was the whole centralized banking structure, and all there was no price discovery, right? Which was there without those price signals. I mean, that's what markets really do, is show the prices of certain things when you have sometimes literally millions of people and businesses and stuff, bidding up or down these prices based on how much they demand and how much there is supply and demand of stuff. And so without that price discovery, um, you can't make those centralized decisions. It just doesn't work. Um, but yeah, so and then he goes back into unemployment. And so basically, another point of view of what the decentralized nature is supposed to do of the Federal Reserve is, since you have this kind of, you have like the Board of Governors and the FOMC, and then you have the reserve banks, which have their own regions and stuff, and they each reserve bank does research over their particular reason or region. Um, and so basically, you're kind of slowly narrowing down the scope of what they're in charge of, right? And so it's much easier to the economy of a single state or a single area is going to be a lot more similar, right? As you go out. So like the smaller amount of, I guess, area, not really sure a great way to put it, but the smaller the system you're looking at, the more similar it'll be, right? And as you start to branch out, things start to change. Um, like down here in Florida and like kind of the deep south, one of the biggest things in terms of land is like lumber, and then there's also what all this with the sun always being out all the time. There's a lot of solar panels and stuff. Now, lumber and solar isn't necessarily going to. It's not going to be a great thing in like Iowa or Illinois, um, to where there's a lot more plains. It's There's snow all the time during the year. I was I grew up originally in southern Minnesota, and so I remember all the snow all the time. And so it's like it didn't melt until like April or May sometimes. Um, but yeah, it's different, right? And so like he even says here, conditions look very different in Philadelphia, Dover, or Lawrence Township than they do in Dallas, Salt Lake City, or Honolulu. So completely different economies based on different things, and so different factors are going to affect them differently. Um, so yeah. And going more on employment. So maximum. Oh, these are for the goals, right? Because you have two goals for the Federal Reserve, right? Or kind of two goals. Two explicit goals, we'll say, that are kind of determined by Congress, right? Maximum employment and price stability. You can kind of throw in a kind of a third for or I guess you could argue that there's a third in terms of asset prices, but it's not a congressionally mandated goal. And so basically, as he defines it, maximum unemployment encompasses a wide range of metrics. Although most attention is paid to the unemployment rate, that number, of course, will never be zero. Instead, we try to ensure that labor markets are functioning dynamically and efficiently, right? And so it's like that has to do with the different types of employment. So it's like you're always going to have people like between jobs, or trying to like get a promotion or a better paying job and so on, or people try to like they go out and try to start a business or whatever it may be. So and then they're technically unemployed. um, so there's some types of unemployment that you're just always going to have, and so what you really want to do with their main goal is to kind of minimize the amount of people who are unemployed, specifically for kind of structural reasons, that they're unemployed because of some major economic factor that um, it is believed the Fed could have helped fix, right? And so I've noticed there's a lot of different arguments on whether or not the Fed actually does anything in that respect, or if what they do actually has a real world effect. Um, but yeah, it's the whole reason we're studying this stuff and talking about it. But and then there's price stability. So it says low and stable inflation, which we judge to be around 2% a year. That she says more on topics in a little bit. But anyways, the whole price stability things too is like if you have prices, and that goes both ways, both inflation and deflation. If prices just tank, typically that's not good. It's kind of it seems like it turns more into like a chaotic system when you have a massive change in prices, right? When prices just spike all of a sudden, like um, I don't want to go as far as hyperinflation, but like very, very significant levels of inflation. Um, Obviously above their 2% target, which again, the 2% is kind of like, if we want price stability, why isn't it zero? Um, And there's merits to both arguments for that. I've heard some good ones in terms of like why we need to have an elastic money supply to where um, small, how to word it, where low, as he says, I guess, low and stable inflation for periods is a good thing. And then it's kind of offset by periods of deflation when it's not necessary, right? Um, and that has to do with other factors that aren't necessarily economic. Um, I guess. But, anyways, to continue on that, and so now that we've established that, I turn to the question so many people secretly want to ask: what exactly does the Fed do? Um, and yeah, and you also talk about what they don't do because this is a lot of the things that people don't really understand. Um, so basically, he says that we have lending power. What that means is we do not have spending power. We have no authority over fiscal policy, which deals with debts, deficits, and taxes, or investments to encourage growth, or grants to worthy organizations, or programs to spur job creation. Those all depend on elected officials, be they on local, state, or national levels. Um, so yeah, the Fed doesn't directly spend into the economy, right? And that's why the whole thing with quantitative easing is technically not money printing. It's the commercial banks that really increase the money supply, right? All the Fed can do is pretty much purchase or and sell securities from them to increase the amount of bank reserves in the system. And right now we're in a regime with an ample amount of reserves. Um, and I have a whole post on that one too, kind of going more in depth. So I'm not going to do a whole 20 minutes to the video going over that. Um, but keep in mind what they do is they set monetary policy, and it's mostly for regulating banks and other government agencies, and they're the lender of last resort. That's pretty much it. Everything that you see on the Federal Reserve's website kind of fits into one of those categories, at least in some way. Um, but yeah, and basically the whole point of them doing all this stuff with monetary policy and just to keep those mandates going. And we're basically, I don't really see a reason to really. He goes into a little bit about how like it's not political at all, until where the Federal Reserve is not supposed to be. It's not a political entity at heart, right? Because it's supposed to be separate within government or whatever the phrase you want to use. Um, but it's still like there's still obviously going to be some form of a political aspect to it in terms of like they still have to be appointed by an official, right? Or if they want like a promotion or whatever, because once they're appointed, they're in there for 11 years, I think, for the governors, off the top of my head. um and then they have to finish out those 11 years, and from there they can be basically appointed to, like, say, a Fed chair position or whatever. um but yeah, So that's all for this one. Just kind of going into a little bit more like the history and such of the Federal Reserve, because a lot of people don't know is like, the Fed's actually the third bank of the United States. It's not the first. But anyways, that's all I got for now. So hope you guys have a good night, and I will see you on the next one.